Hello and welcome. You are listening to the Investor Lab, the auditory epicenter for passionate people seeking life of freedom, choice, and abundance. My name is Goose, and on today's show, we were joined by Nick Tchea. Now, Nick is a 27-year-old investor who's just bought his first investment property, but we talk about all kinds of things in this episode, which I really loved. We talked about how his mindset has shifted from trying to own a home to actually now building a scalable, profitable property portfolio so that he can live the life that he wants rather than just focusing on trying to get the principal place of residence first, which is a great lesson for a lot of people, particularly younger investors. We talked about how millennials often feel like they need to chase risk versus safety with crypto versus property. So that's a really great discussion that we had there. And we talk about how he achieved over 60% return on invested capital in just 4 months through his investment property. So there's a lot to unpack here in a very short but impactful episode. I really enjoyed this conversation and I'm confident you will too. So without any further ado, let's get stuck right into it. And I'll see you on the inside. Hey guys, welcome back to the Investor Lab. Joining me on today's show is Nick Tchea. Nick is a millennial investor who's recently had a big mindset shift, which I'm excited to get stuck into and find out a lot more about that. But before we do, Nick, welcome to the show.
Thanks, Goose. Good to be here. Very excited to be here, mate.
You're very excited to be here. Why are you excited to be here?
Just been listening to the podcast, past and present, and just keen to get in here and be a part of it.
Awesome. I love that. Well, before we get stuck into it, it'd be great to give some of the listeners a bit of a background on you and to your story. So why don't you kind of give us the Cliff Notes version? Like where did you grow up? Tell us a little bit about your background and that'll help us build a picture to understand how you got to where you are today.
Yeah, sure. So I grew up in a pretty big family, 5 kids, so 2 brothers, 2 sisters in the southeast suburbs of Victoria. I'm a bit of a mix, so my mum's full Italian, my dad's half Chinese, Portuguese. So growing up was very interesting. Household was very full, lots of in-house fighting, but we're all very close, which is nice. But I guess a bit more about myself. I'm 27. I work as a RF engineer, so like a quick laydown of that is what my company does is, say you go inside of a tunnel like Eastlink or one of the tunnels in Sydney, you wouldn't actually get like normal AM, FM radio, but we rebroadcast those signals throughout the tunnel so you can still stay connected to Triple J or whatever you fancy. So that's what we do.
Awesome. And so is that the same technology that allows you to to take over the radio whilst you're in the car as well?
That's correct. Yeah, that's another part of it.
Because I've driven through the tunnels and then all of a sudden you get the voiceover and it's like, where have you come from? You're hacking.
Yeah, that's exactly it. The break-in audio.
Nice. So you're 27 and you live in Melbourne, right? And you're an RF engineer. When did you first start getting interested in investing in property?
So I've always kind of been interested in property once I left high school. It's always something that I've looked into. But back then, the funny thing about this is that I always thought that property for me was always going to be like buying my principal place and kind of just working towards that, buying principal place, kind of like what my parents did, and then just paying that off that mortgage, and then you could look into it something else. But yeah, things have definitely changed in the last year or so.
And so what changed for you to change that perspective? Because that's a pretty normal perspective to say. I'd say a couple of things. Like most people don't really think about investing. They just think, one day, am I going to end up owning my own home? But then also most 27-year-olds are probably thinking, I'm just never going to buy a house, full stop. I'm priced out of the market. It's never going to be attainable for me. All properties are $1 million. It's out of reach. So talk to me about your mindset around that. And you said you started getting interested in property in high school. So what made you start thinking that property was going to be on your agenda versus loads of other people who just might not?
All right. So I think for me, as I finished high school, straight into uni, and that was kind of my main focus. And I did a double degree with business as well. So we were doing a lot of learning about stocks, and cryptos was starting to get into the big scene as well. And both those things I wasn't too interested in it. So following it, looking at the numbers, constantly having your gaze, which is pretty much what you got to do for that stuff. It just wasn't me. Property, however, I felt like in the early days, where my main switch happened was in the early days, I kind of most of my property information came from just normal news, which is not the way to go. Because I swear, I don't think one time in my life I remember seeing on the news them saying, it's a good time to buy property. No, it's always a horrible time. Property market's going down. I swear it's never changed. And they just keep saying it. And eventually, like, I don't know, kind of just wisen up a little and just realize, like, I'm going to do a little bit more digging myself. And, you know, if you just look at the historical numbers, you just see that, like, oh, gosh, I wish I looked into this a fair bit earlier. But yeah.
That's so interesting. It's so interesting that you kind of worked that out and you kind of like saw through that, because it's true. It's either there's kind of only two speeds with the property narrative. Well, to be fair, there's probably three, right? So there's the property market is crashing, or the property market is unaffordable, and every now and then they'll throw in a boom, right? Just to get everyone excited, and then they'll say it's crashing again, just to kind of but it's always this kind of like sensationalized kind of thing. So it's pretty cool that you kind of started to see through that. I want to kind of go back to you were talking about crypto and stuff like that. And I've spoken to a few younger than me. I mean, I'm in my mid-30s, so I'm not exactly old, but like people in their 20s, right? And I've sort of said, like, hey, why are you not interested in what? I actually spoke to someone. I said, why are you and your friends not interested in investing in property? And he said to me a couple of things. Well, he said all properties cost $1 million. That's the general perception. Properties cost $1 million.
Yeah. Absolutely.
And the implication of that is also that most young people, actually more so than ever before, like if you go back to when my dad was young, the vision was get a job and get a job for life, right? That was the goal. Younger people these days are like, get a job for life? Screw that. Like, I want to get a job for the minimum amount of time possible. Like, life is not about having a job for life. And so there's this really interesting dichotomy where younger people are more self-aware to understand that they don't want to have to work forever. However, the vehicles that are available to them, generally speaking, the low-cost, easy access, low-cost ones are also more high risk, things like crypto and shares. Yeah. And so you've got this dichotomy where the accessibility of financial assets has increased, but only in the higher like risk-on type assets. And the perception is that you can't, that like property, whilst it may be a better vehicle, is actually not going to be attainable anymore. Do you think that's a fair kind of mindset to say that a lot of people have at the moment?
Yeah, I would definitely say so. A lot of my friends have that mindset, but like for me, the reason why I kind of didn't get into that stuff was just, I don't know, I guess I'm not that not that much of a risk taker in that sense. But I think the main thing that held me back was just, I just don't fully understand the whole crypto thing. Like, I don't have enough knowledge to fully bet on myself in my decisions, as well as I know that, like, just when I think about it, like, property, it just makes sense that a house is never going to be worth $0, firstly. And as the population gets bigger, like, you know, having a better, like, location for your house is only going to get better. There's no way house prices are going to go lower, if anything, compared to stocks and crypto. Which, well, I don't have a great understanding of those two subjects, but to my little understanding that I have, that's the way I feel.
Well, it's very true, right? It's very true. It's like, I mean, sure, you can build $1 billion company or whatever, or invest in $1 billion company that comes, but they can always go to zero. You just look at FTX recently, you know, the kind of like that was a multi-billion-dollar enterprise which just went from billions to zero, like literally in like 24 hours, right? Yeah. And so that's the kind of risk volatility kind of thing you've got to trade off. You said something interesting there. You don't understand crypto, you don't understand shares, so you didn't invest in them. But how much do you understand property? Because obviously, so, you know, I'm cutting through to a kind of point there is obviously you still went and sought help to invest. And so at what point was it like you were like, okay, I know enough to be dangerous, but not enough to execute well? Or can you kind of talk me through that process? Because a lot of people kind of get some degree of knowledge and they're like, oh, property's good. And then they just go buy any property. So they might have gone, okay, not crypto, not shares, I'm going to go buy real estate.
Yeah.
But what was the bridge where you said, I know this is for me and I know enough to know that it's for me, but I don't know enough to make sure that I can get it correct? Or talk me through that process there.
So I think the best way I can explain that for me was, like, I was pretty ignorant, like with what you were saying before, with how, you know, if you buy a house, it's $1 million that you're going to commit. That's kind of the mindset that I had, that I need to save as much as I can. But in the last year or so, I know Jason, he's been on the podcast before, And I've had conversations with him about, you know, kind of a lot of my property knowledge of late has come directly through him. And he kind of taught me that it's okay to buy a house outside of your state. And that was a huge problem for me, because it's like buying something that, you know, I haven't visited, I haven't had a look at, or it's just like a very scary thing for me. But yeah, having a lot of talks with him, he kind of like made me realize that it's a worthy investment opportunity. But
yeah, that's pretty interesting. Okay, cool. So, and you recently bought your first investment property.
Yes, that's right. I bought it in.
Talk to us about that.
Yeah, well. So I had a couple of game plans, right? So I think how this all really started was in June. I had a pretty serious relationship going, and that all fell through, which is fine. But the game plan for that was to buy a house next year. So I had a lot of capital just building up in my bank, and then all the inflation troubles, it just made me like, oh gosh, I really need to start throwing this money into something. And I knew property was probably the most likely way for me to go. So I ended up talking to Jason, and he was telling me about Dashdot. So I had a look through you guys, and we had a look through a couple of properties. I think we looked at a fair few, but the one that was the best that I saw was the one in WA. And that house, I think it was like 2 months of searching, and we ended up settling, and then, settlement was really nice and quick. But, sorry, does that answer your question?
Awesome.
I'm kind of like rambling on a little bit.
It's just fine. I'm going to dig into it a lot more, don't you worry. So you said that you saw a lot of properties, and you thought that one in WA was the best. Why did you think that was the best? Like, how did you come to that? I'm surprised that you saw a lot of properties. Usually we try and get a hole in one. Usually you try and steer. But all good. But what made you go, yep, that's the property for me? Like, how did you form that decision to go, yeah, I feel confident this is a good choice?
Yeah, I think I kind of misspoke when I said a lot. It was actually, I think it was 3. So
okay, that's cool. That's good. Yeah.
So the first one we saw, actually, I think it was only 2, mate. It was only 2. So the first one we saw was in New South Wales, and I think it was just mainly the location that I kind of was like thinking, would I want to live there, in a sense? The one in.
Do you remember where it was? I don't mind if we talk about locations on here. It's really interesting. Where was the one in New South Wales you didn't like?
I can't remember. I'm sorry. I can't remember the name of the suburb.
No, that's okay. It's all good. It's all good.
But it was kind of, I just can't remember. But it was a bit away. It was a bit further out. But the one in WA, the reason why I thought that one was such a nice place was, like, in my mind, it's such a perfect holiday house. Like, it's like, I think it was like 5-10 minutes away drive to the beach. It was like 500 meters to a station. Other way, 500 meters is like the largest shopping center there. So it's like, just location wise, it just looks like a really spot on place to like live. So I just don't think, I just thought like, there's definitely value in this location, in this house for sure. And the house was like, it was in good condition. I haven't had to do any maintenance or anything like that on it. So it was kind of just get it, and it's just been moving ever since.
I've just looked up the house. It's an absolute cracker, and it's in a great spot, by the way. You bought that property about 4 months ago. It's settled. That's about correct? Yeah. And so, right in the media lately, there's been a lot of talk about property markets crashing and all of that kind of stuff. How has your experience been with property markets crashing? Because I don't think your property's done exactly that.
My property's done actually pretty damn well, which is nice. Like, I don't know what else to say. Like, everything, like, as for expectations for myself, I kind of kept everything quite conservative. And that's the way I kind of like to do things. And, you know, it kind of, if you see something do better, then it's just perfect, you know, kind of lowball yourself as much as you can. But like, with the interest rates and everything's kind of held the same. Like, I haven't had to worry or even notice too much on it, because like the other benefit for me buying there was that I didn't have to borrow as much. So the whole interest rate changes haven't really hit me too hard. Whereas if I bought like I said, if I bought next year, it would have been like, $1.3 million house or something like that, I was probably thinking of, it would have been a hard time.
That would have hurt a fair bit. Okay, let's talk about the property a little bit, because you bought the property for about $330,000. Is that right?
Yeah, that's right.
$330,000. The details I got here is a $330,000 house with a 6.6% yield.
Yeah.
You settled about 4 months ago, and it's grown by 13% in 4 months, which has given you a 61.7% return on invested capital in 4 months.
Yeah.
It's not bad.
Yeah.
It's not bad.
Crazy.
What do your friends and family think about that? Do they know about it? That's another question.
Yeah, definitely. And I got a lot of flack from my family about it, because my family are my dad's definitely quite old school, so quite traditional. So he was not about it. He was not happy I was doing it. He was not on board. He did not.
Why? Just like the investing in property in general, or investing in WA, or like what was the
investing outside the state
was
a huge issue that he kept raising on me, and just not knowing the place, not knowing the area, and if something goes wrong, what's going to happen? I'm not going to fly out there. Stuff like that was his main concern. But yeah, he's just conservative. He's just a conservative guy, and I can't blame him for that.
Cool. No dramas. Tell me about, how did you think about your loan structuring, right? Did you just I don't know what your loan structure was, but I'm very interested to understand how you thought about it. Did you think about going 80% or 90% LVR? Did you talk to me about that process? Because the finance piece is a really interesting part of the whole purchasing process. Did you have any conscious decision making around that at the time, or did you just go, I don't know, give me some money and I'll take whatever you give me, sort of thing?
It was pretty much the latter, mate. It was pretty my mindset at the time was that I just wanted to get this going and get something moving on my behalf. Because like I said, I had a lot of money just sitting in the bank, and I really didn't want it. I hated it. I hated seeing it there. And I really just wanted it gone and doing something and working in the background for me, rather than, just getting eaten up by inflation.
Nice. And your friends, have you spoken to your friends about it? Because you mentioned you've got friends who are into crypto and shares and stuff like that. Have you spoken to them about this?
Yeah, absolutely. They were
has it shaped their thinking at all? Because you've made a 61.7% return on your invested capital in 4 months on a stable asset, right? Yeah. So it's not like buying a meme coin or something like that. It's gone up and it's potentially going to go. So that piece, if they're thinking about kind of return and ROI, surely that must be an interesting part of the conversation.
Oh, yeah. Well, I haven't told them how well the property's done so far yet, but it will. Next time I'll see, we'll bring it up. But when I was doing it initially, they're all pretty supportive of it, but in their mindsets, they're you should just chuck it in this coin, chuck it in this stock, It's just you're wasting your opportunity here, was a lot of what they spoke about. But the property game, they know it's I don't feel like they all thought it was a great idea of what I was doing, but they just felt like the crypto game was going to be a better success or a quicker return, because I think they're playing more of a short game when I'm thinking more long term. That's the difference between us, I think.
Yeah, interesting. And so, what's your perspective? You mentioned that when you were in a relationship, you were thinking about buying a principal place of residence, and then your relationship ended. Cool, you decided, right, what am I going to do with this cash? You've started to invest. You also mentioned that earlier on, as you were growing up, you were thinking about buying a principal place of residence. So has that changed? Are you still, what's the goal for you? Is the goal still I want to buy my dream home, or is it I want to build a big property portfolio? Talk to me a little bit about that, or any kind of mindset shifts you've had in that area.
Yeah, okay. So yeah, owning principal place was always the main goal for me. And I think now that I've come to a better understanding of how the entry to barrier to getting a house isn't as large as I thought it was initially. And that was definitely one of the big things that changed in my mind. I think my goal is I try to keep it quite achievable. And I think getting around 100,000 passive income is something that I want to try and achieve. I think my goals are to maybe buy maybe 6-ish properties by 2030, I think is the main plan. And from there, it's just, I don't know. I really got to see how it goes. But I keep rehashing. But yeah, if I can get 6 properties by 2030 and just be kind of like a rent investor and just renting out and see how it goes, and every year just got to reassess and see how I progress really and how well each property does.
6 properties by 2030. So we're in 2023 when this episode is live. So that's 7 years. So you've already got 1. So that's only 5 more properties in the next 7 years. Is that right?
Yeah.
Man, that's easy. You're going to walk that in.
Yeah.
And so you actually did a portfolio growth plan. What kind of insights did that give you?
So I reckon the great thing about that, I think I did it with Cam, and Cam was saying by 2029 to achieve 6 properties, and 2 of them were going to be foundation, and the rest were going to be accelerator properties. So I think the good thing about that growth plan that helped me understand was that it's quite conservative, so it just gives you a good idea on what's going on, not taking into account of like salary growth or other factors coming in to give myself a bit of a boost in buying these properties. So it's definitely quite achievable. And year on year, as we get closer and as we buy the next property, it's just going to be able to help me nail down what a more realistic plan's going to be like. As we get closer in, we're going to be able to nail it.
Yep. Cool. I like that. I kind of want to dig into a couple of other things as well. So what actually, what are you going to do? Once you hit your goal, because you've got a pretty achievable goal. You're 27 now, right? And so basically within the next 10 years, you're going to achieve your financial goals. What are you going to do then? Once you've actually hit that mark, what are you going to do?
Oh gosh, mate. I'm not too sure, to be honest. Really, just what am I going to do?
What are you going to do? Let's just imagine. Cast your mind forward, right?
Yeah.
Cast your mind forward. You've achieved all your property goals. You've achieved your cash flow goals. You don't have to work anymore. You've got a stable, reliable, recurring revenue stream coming from your properties. It's not passive income because you're still got to deal with property managers and stuff, right? It's not. Yeah. It's not hands-free. It's just hands light. But you can do it from anywhere in the world. You're going to live the life that you want. What are you going to do?
I'd definitely be looking into a lot more travel, that's for sure. I've been moving around a lot. But it also really depends on family circumstances as well. If I do end up finding someone, I definitely would want to start a family and have those things moving along. But yeah, it'd mostly be traveling for me, family, and, trying to have a kick-ass primary house if I can get it.
Yeah, nice. I love it. What advice would you have for somebody else who is, we'll say someone in your age group, in the kind of mid-20s, we'll say, who is maybe sitting on the fence and unsure about whether they should invest in property? What advice would you have for them?
So I was on the fence for a long time. And I think as long as you feel like you've got good support, and you need to surround yourself with good information and good people to back you up. Because I definitely wouldn't be in this position right now if it wasn't for my support as well. There's no way I would be. Yeah. And I feel like as well at the same time, it's just about pulling the trigger, and you just need to go for it. Because the longer you wait, like I said, everyone just keeps saying that it's going to go down, it's going to crash, it's not going to happen. But if you just keep going off what they say, you're never going to be, you're never going to get in, because it's never going to be a right time.
Yeah, it's a good point. Did you have any fear or doubt that you needed to overcome, either to get started or through the process? Was there any kind of big wall that you just had to try and climb over? Because I feel like there's a bit of that at the start where you're is this even going to be a good idea? What if I blow all my cash? What if it does crash? What if I buy the wrong property? What if? Did you kind of have to consciously deal with any of that kind of stuff, or were you just? I think you're just cruising. You're nah, go in this direction.
The hard parts for me was really just getting the understanding on how this all works out. Buying your first house, because I've obviously never done it before, and I don't really know what the understanding is, how everything's going to work with your loans and with your offset, and I knew these things, I knew them all, but actually doing it and getting it set up was all quite daunting, and it was just a little bit of just a fear. But like I said, sometimes you just got to pull the trigger and just see what happens and just get it moving and just stay on top of things. And then if you're not sure, you just got to reach out to someone, because you won't have all the answers. Some of your support will have other answers, but you just got to keep looking out and just read up and learn, because you're just going to learn as you go.
Nice. I love it. Cool, man. Well, I really enjoyed this episode. I think there's a lot of lessons in there, to be honest. I think the fact that you have done this and you've got such great returns is awesome. And you seem like you've got a really clear picture of what you're doing, particularly now you've got a portfolio growth plan that's kind of lighting the path for you. So, man, I'm super stoked to have you on. Awesome. Well, man, I've really enjoyed this. It's been a really good chat. Really appreciate you coming on and sharing your story as well. And I think that there's a lot of lessons in there about how to think about risk and timing, how to actually just take action, and what can actually be achieved when you do that. And I'm really excited to see you scale your property portfolio over the next few years, and I'm really excited to help you with that. So thanks for coming on the show.
Nah, thanks for having me, mate. Really appreciate it.